Hello viewers, welcome to this week episode on Forex trading analysis. As promised from the last week video, this video would be a continuation of our last week video on moving average convergence and divergence, which is popularly known as MACD. As we promised, we said we will be introducing us to other indicators that we can combine the MACD with to give us a perfect market entry. If you are watching us for the first time, do hit the subscribe button. If you are a returning viewer, hit the like button, and then we will look forward to see your comments in the comment section, how you have enjoyed the previous videos, what are the areas you need us to clarify further, and if there are topics that you would like we've not touched upon in Forex trading, you've heard of it from somewhere, you've been using it, but you need further clarification on them, you can also drop them for us in the comment section. Having said that, in today's episode, what we will do, we will explain the concept we say we want to introduce, which is the relative strength index called the RSI. The RSI indicator is not, I will show you on the screen shortly. The RSI indicator is an indicator to tell you what is the strength, or where it's usually used to determine market reversals. What's the position of the market at the moment, and what are the possible reversal points for the market, as I will show you shortly. Then we will move on to I will make a brief recap. At least this will be more beneficial for the guys that joined newly, that have not watched our previous video. The recommendation is for you to go back, search the MACD video by AFTech. Then when you watch that, you continue from here. So, but for the purpose of summary and also having an all-in-one package in a video, we would give a recap of that. Then we would talk about some terms. I have mentioned them before, but today, for us to combine and deliver this package, we would go back revisiting them. We talked about convergence and divergence. We talked about that in our previous video. We would also see how we would use that to begin to look out for entry strategies that will work for us. Okay, so as usual, it's going to be a bit long, not too long that you could not you will not be able to watch, or you get distracted. But if you want to get a cup of coffee, do that now. And if whatever it is you need that will keep you relaxed to listen to the video, to listen and watch the video. Now, starting with the approach today would be that we'll do it together on the screen. It's more like my classes are usually a practical one where I'll be showing you how I will do everything. As you can see here on the trading view, the prices are blank. There is nothing. I don't have any chart on the here. What I would, and I'm on the daily time frame, just scrolling left and right. So what I want to do is that we will begin to do this together. I'll bring in the MACD. Okay, we are good to go. Let me bring in the MACD indicator. You go to your indicator list. Then here you type MACD for short. The network is a bit dragging. Let's see. You type MACD. I think I also have marked it under my favorites, if that will be faster. Moving average. Okay, yes. This is MACD. Yes, it's loaded on the screen. Oh, I have it loaded twice. So let me close one. Okay, this is MACD on the screen. You saw this from our last video. So the other one I said I will introduce, which is the relative strength index, you go back to the same place and type relative strength index. It's not here, it's here. Let me check the relative strength index, which is this first one. Okay, let me add it to my favorite list as well. So now I have the two I want. The relative strength index is still loading. Before it loads, it finish loading, I would, okay, this is the relative strength index. This is what it is. If you look at it closely, you will see that it is also moving in the direction of the prices. Look at this line, up, down. So you would see that while we are here, it is up. Then again, it's more like a linear representation of the graphs you have up here. So this is the two tools I want, and the objective of this session today is to see how can we combine these two tools to make a perfect entry to determine the direction of the market. So for the benefit of those that are watching the video for the first time, I said I will make a recap of the MACD itself. For the MACD, as we said, is the difference between two exponential moving average, the 26 and then the 12 moving average. So the difference between the two is plotted as a line graph, which is these two that we saw here. The gap within them shows the how the momentum of the market, which is also represented in histograms here. So if you look at the histogram, you have this colorful histogram, or the colorful MACD here is coming from the TradingView app. If you are using the MetaTrader 4 or 5, you will not have it in this colorful format. So what happened here is that even the green and red, you see that some of them are fading, while some of them are thick red, thick green, fading red, and fading green. So there are still meanings to each of these ones. While we said that crossovers, that is when one of the MACD line crosses over the trailing line, that is the second line, which is the signal line. Whenever it crosses, it's an indication that the prices is about to begin to go the other direction. It's crossing down. MACD crossing down shows there is a potential downtrend, and MACD crossing up also is a potential movement up. So, but what led to today's video is that we said while this strategy works, you cannot depend on it alone. You have to look at other confluences that will support your decision making so that it's stronger. And this is what brought about us talking about the RSI. So as I said in the introduction, that RSI is used to indicate an overbought or oversold conditions, so that you will know that the market is about to reverse. So what we do today, the key thing we'll do here is that if we combine the RSI to, if we are using the RSI, we'll be looking at the convergence and divergence. Convergence is where the graph, the price action here is going downward, and then that of the RSI is going upward. And also we can use the convergence and divergence. We can use it through the MACD. Use the MACD to analyze that, and what we will be picking from the RSI is to just check whether it's overbought or oversold, to make clear for us that yes, there is a potential reversal. And as usual, what we do is that we just go randomly, do a playback, cut the video from behind, then we begin to test together. This is backtest together what is the potential for us to take a perfect trade. Okay, so what we do is that this is the daily time frame. I'm scrolling back. It will load shortly. I will scroll back, then I would do a cut of the chart so that we can together have an entry point. Sorry for that disturbance. Okay, good. I think let me do that. Click the replay. Then it will cut for me. Then we'll begin to analyze the market so that we can practice together. Come on. Let me try it one more time. I'm not getting I'm not getting the tool I want to use. Replay. Okay, good. Yes. Okay, so I think we can take the replay from here. This is July. Okay, 2014. Oh yes, I think it's okay. We can take the let's just take the replay from anywhere here. Okay, now I place it here. That's a took us as back invalid symbol. This is network. It took us back as far back as 2014. Okay, let me hit the play button. Maybe this would. Okay, it's pretty slow. Okay, now play. Bar replay can be connected. I need to change the network. Let me connect to another network source. I'll be back shortly. So I'll be locking this region. All I need to do is to click on this, then come here and lock it. I'm locking it so that it will not move. Then, so my expectation is that when this breaks below, it's going to come here, touch it, and potentially, if possible, go back downward. Then this will be a resistance. So, but in other words, there is always, sometimes this resistance could actually change character. How? That when a supposed resistance, you have a break of that. So when it breaks it, then the prices come back to that position and reverse back again. We call it, it turns to a support. So in that instance, it becomes a very, very important region. So in this case, we had, this is the zone here. This is the last candle here before this. When it came up here, it came down. Then it came into it again. Though there are little movement here, which actually shows market consolidation. So after this consolidation, we eventually had a break here that formed a new higher high. Okay, I wouldn't say here because it's still more like consolidation. Yes, this was above it. It was a higher high here, little, but the major one actually happened here. This became the higher high. Then I'll put another box there. So putting another box in this region, what I would expect is that it broke through it. Okay, I was expecting it's going to come down from this region, but it broke through it. Let me lock this again. I lock it. It broke through it, went up to this region to form another higher high. It came back, retested. So again, the new high, each time you see new high before the reverse, the last candle before the reversal, you plot it as a region. So what happened here is it came in here, then it came out. What it did was that the last support become resistant, the last resistance zone that it broke through now became a support for it. In a quick succession, it came back in here to this resistance zone, and then it breaks through again. So this has shown that this is a support and resistance zone. So what I will do here, because of that, I will make it an important region for me. I can either thicken the color a little more, let it be thick. Because of that, I will be using that as a differentiator to tell when a support become resistance and stuff like that. So on the screen now, we have this as the support zone. If you see that even towards this side, we had a lot of, it became, we have 1 2, so it was bouncing between these two, and when it breaks through here again, it came in here as it becomes another resistance zone. It was a support here, it became a resistance here, so it's a very important region for us. So this is how I would plot my, I would put my support and resistance zone. This was also once upon a time a support and a resistance zone. So let's make it the same thickness as this one. Just yes, it's also a support and resistance zone. So this is the highest here. When eventually this is broken up again, it becomes another support and resistance zone. Now, for those that watch our previous videos, the way we have some rules around the support and resistance zone. When you have either a support or a resistance zone, or a support that turns resistance, one basic rule we use here is that if you have the first time it came here, it became this the resistance zone, right? We will wait for it. When it comes the second time to test this region, then we step down to the lower time frame to begin to look for a market entry. In this case, for this video, I won't be going down to the lower time frame, but I would explain that's this in this scenario. I won't go up, but I'll explain to you what to look for. Immediately this first candle closes. Immediately this first candle closes. In this case, it's also an engulfing candle. It's also an engulfing candle. So now that it closed, if I go to the lower time frame, because I'm from the daily time frame, then I'll go to the 4-hour time frame. I will look for a perfect entry here. So using our rule of the engulfing candle rule. You have an engulfing candle here. It came out of the box, come back again into here, another engulfing candle forms. Then it's an indication that there is potential downward trend. Now, what other thing would tell us here now from other indicator, other confluences we have on the screen? So this region, this first one that happened, if you look at your MACD line, your MACD turned here. It turned here, though we had a crossover here. You have the MACD turning here. You also have, okay, now let me change the settings of the RSI. Sorry, I didn't do that before. The RSI, what I do, so that because there are some, the default setting is usually on 30 and 70. 30 below, 70 up here. That when it crosses above 70, it's overbought, and when it crosses below 30, it's oversold. But for us, for perfect entry, so that it doesn't fake out almost most of the time, I change it to, so that we are sure, we are very sure. This is the visibility. No, this is not what I'm looking for. Sorry. I'm looking for the settings. Inputs. Style. Okay, here. Here, I will change this to 80. I'll change this to 20. Sorry. I'll change this to 20. Then the midline, which is 50, this is the midline. I want to change the, I want to see, yes, I want to change it to lines instead of just dotted lines. So I'll leave these ones as dotted lines. This is black, this is, yeah, this is okay, this is okay. So yes, any other thing, you leave every other settings the same. Okay. So what you do is that for your RSI, what you look out for is if you have the RSI line crossing over the 80, then you begin to consider that there is potential overbought situation. So what you can do then is that you look at your other confluences to see what is it that they are telling you. So when RSI crosses this up, then look at the chart, what's happening. The chart is actually in an uptrend, and it has also but what this is telling you that, come on, you are already entering the overbought region. So you begin to look for what? You begin to look for sell signals. Now when it's crossing it down, meaning it's exiting the overbought region, is it enough for you to jump into the market? As you could see here, it crosses it down, but what happened? It went again upward. Okay, now at the beginning of the video I talked about convergence and divergence. The convergence and divergence here is, if I look at two highs of the RSI, here you have a high here, here and this point. If I draw a straight line, if I draw a line joining this and this, or I could, yes, let me do it this way. Okay, and I go to the same point here on the price, am I able to draw? Okay, yes, this is the same point here. If I draw from here to here, ignore the chart itself. Ignore the chart itself, but look at the lines I drew now. They are parallel. They are both moving up. So this is not a convergence. This is not a divergence. Okay? But when I do this, when I join this place like this, now what did we notice here? Here we notice a downward slope. It's just the 2 points here that I joined. Okay, then we notice, let me do it this way. Yeah, you see I placed the line on these two tops. We notice it was sloping down. Now if I come back here also, I take this point. Let me see. Yes. Okay, this is the exact point here. So I put this here, and then the second point here, which is up here. If I draw this way, I'm going to show you this from two angles. Let's put it. Sorry. I'll put this on the top here. Okay. I can extend this further. So we see that this is going up, this is coming down. This is a divergence. This is a divergence. Now, this same thing I showed you here, I could also do it on the MACD. On the MACD, within this region, you have a high here, right? Then at the second region, though it's not very visible, if I put, this is almost the same line. So now you could see that I'm beginning to use the three tools to look at what are potential market entries. Although I'm going to show you from the ones we have not played, right? Because we have we'll apply it I'm just using this concept to explain it. Then we move forward and analyze the market and do a proper entry. Then we play forward to see how it played out. Okay. So here I have one of the rules is met. I have a divergence here. Then this does not tell me to enter the market immediately. It's just an indication that there is a potential reversal. So at what point will we now enter the market? Now, the second one crossing here, crossing the 80 line here, I will look at, immediately it's crossing the 80 line here, I will scroll down to a lower time frame. But note what happened here. Even the MACD itself had you've seen that there is indication that this is going to begin to come down. Now, you look for, yes, this is an indication that this is beginning to come down, but in ideal sense, by the crossover, it's a confirmation. Once it crossover, it's a confirmation that down trend has resumed. But what you will do is that it is only stronger if this is usually stronger when it crosses the zero line. But from here, because we are combining it with other indicators, we can have an early catch of this market instead of waiting for when it eventually crosses over here. Okay. So what happened, because by the look at the crossover, the price is already here. You have lost some, you have not lost per se because you did not enter the market. It's only going to make your stop loss wider instead of tighter. If you are able to catch the market here within this region, then you are able to tighten your stop loss. So what happened is, as I said, immediately you are able to, you have a convergence here. This had shown you the second time that this is likely to go down. You saw this engulfing candle here. You step down to the lower time frame to look for a perfect entry. Then you take your market. Okay, so your market entry is usually from this point. Then whatever it is, for this, because it's just a turn yet, it is not enough a confirmation, because this could be a lower low and then the next one will be this could be a higher low and the next one will be a higher high. So for that reason, you wait first to have the second confirmation, which means it will definitely come to this resistance zone before it breaks down. So when it came back here, then your signal here will be an engulfing candle. Immediately the engulfing candle completes, you can now place your sell. So this region, your first take profit will also be the first region here, the support and resistance, because it could come here and bounces back again. So that will be your first take profit target. Your second take profit target will be that, okay, if it breaks this, definitely it's coming down here. Okay, so this is how we combine the three tools. Of course, you've seen we talked about the MACD extensively in the last week video, so you look for that. Then here we talked about the convergence here, the divergence here. Let's look for a convergence scenario where we can use that to explain and now get before we move further. Okay, so you enter your market here and then your take profit target 1 is here, take profit target 2 is here. Now when it got to this region, we see the market pulled back again. Approaching this region, what we look out for is to see whether it's going to break it again or it's going to form a new resistance for this zone. In this case, it became a resistance. It came down, retested it again, and so on. And if you have also watched our video, something played out here within this region. The Elliott wave theory actually also happened here. I will not touch that. I only show you the sign. I'll count it for you. And if you have not watched the video, look for our video on Elliott wave. We'll put the link to that video on this video comment section, and just go watch it. Here what happened is you have your 1, 2, 3, 4 and 5. It's completed. A, B, C. Then you have another, I think like another 1, 2, 3, 4, 5 also repeated here. This is 1, 2 came somewhere, 1 ends here, 2 came somewhere here, 3 ended here, 4 then 5 again, and so on. So we leave that, just go back to the Elliott wave and then look at that theory. So now, as I said, let's look for here, this was this, no, okay, I'll use another one. Let me leave that on the chart. So let's see again whether we are able to see price moving in different direction. Okay, here the price is going downward here. If we join our lines here too, it's also going downward. Here it's going upward. So again, what you first of all, your first indication is to look whether you have an overbought or oversold situation. Let's see where we have that again. I see one here. This is an oversold situation here, and if we check, is there any other confluence telling us to use same? Oversold situation, we have strong sell here happening, but the crossover happened here. This is where the crossover happened. When the crossover happened, RSI was not in the oversold region. Okay, I think this is a run of the entry has, okay, the downtrend has actually started from a very far place, which is here. The downtrend started from here. It came that you have a retest here and it begin to go down. So when it got here, you have an it's touching the 20 line, but it's not, it didn't fall into our own strategy. It didn't fall below the 20 line, so we leave it. Then you see that you have some consolidation. Do we have a signal here that gave us a good entry here? Here I see the MACD line crossing down. First of all, you have a strong one here. You have the lines are a bit strong, which means there are some volumes here, and then the volume begin to fade out. When the volume begin to fade out from the up, is an indication, a slight indication that there might be potential sells happening. Then you begin to watch out. Most things you watch out for is that during this consolidation, you look for is consolidating within a channel. You look for channel breakout. Okay. Yes, there is a channel. I don't want to use this. Okay, let me use it. Then I would change the setting. Okay, let me use line. There is a channel. The market is within this channel here, and then let me take another one. You have, this is the low here. Make it a straight line. Okay, is within this channel. This is the channel that the market is happening at the moment. Okay, let me drag it down a little. So what will happen is that within this channel, I know that you have your, I think here it's a support. You have your support here. So within this, you'll be checking, because it could have been a retouch of this support and go back to the resistance zone. But you will now be watching, because we have marked the region, that any candle that closes below this region is a change of trend. Is changing this. So not change of trend, is changing this from being a support zone to now possibly become a resistance zone. So here we had that break. If you check, the point here is also in the oversold region. Yes, but this oversold is not an oversold that happened above here. It's not enough evidence for me. But I will look at the MACD. MACD had crossed over here. So because the MACD has crossed over and I have these thick lines happening, I will take a sell from here. Now, we have not marked the, we have not made, because let's assume ideally the best thing is for you that when you enter, you go as far back as possible as you could to actually mark your key regions. I think that's a perfect one. What I would do, I want to mark my regions here and then use that to possibly do the first trade demo. If you look at this from here, when you have this up run here, there is a resistance zone here, somewhere here, because this run, higher high, higher low, higher high, higher low. There is a higher high here, then higher low. So for this one, I think this is the candle, or let me take it from back here, high high, higher low. Then Okay, this one you had a turn here. Usually when I'm marking my regions, I use where you have strong momentums to mark regions. Okay, strong momentum, it shows that each time prices get to that region, there will be, yes, which is in this case I want to use this to mark this, that each time prices get to that region, it will also again it's either it's retest or it goes back. Okay, see, when this market run into, let me lock it so that it doesn't move. When we have this market within this region, there was a resistance here, it came back, buyers pushed them back again, it traded above it a little, they came back, you have it double here. So usually if I look at this is triple now, 1 2 3, there is strong indication that this would rather go down first before it begins its up movement again, which eventually happen here. Again, this might also be falling into another region of another zone, that the turning zone here, but this is not strong enough for me. This is the last candle before the movement upward. I'll put another box there because it's a potential region in the future. Where is it? I said this one, right? So I'll also put this. This is how you mark your key zones on the chart. Even this, no matter this, the momentum here is not too strong. You had this, then it became to, so you can also mark this point when you, this is the first engulfing, so you can also mark this region as a region of interest, because in the future things, prices would likely come back to that region and things again will happen. So you mark as much as possible. You see it actually happened here. It played back here, and then it went back up. So now let's fast forward to where I was before I came back here. Sorry, I think it was a break of this down. Yes, okay, good. We were here. So you see, you look at where we went to draw it and look at what is happening here now. Similarly, downward, you could do it downward, you could do it upward. As we begin to proceed, I'll be marking the ones that taking us up. Okay, so now we have this. It breaks this region. It breaks this region. It came down straight here. Then this become a new resistance zone. So when this happened, we analyzed here before that when you have this crossover down and is below the zero line, this is a very strong entry point. We explained this last week. This is a very strong entry point, and then it is if you enter your market from here. Also check in the, I use the line is not thick enough, the 50 region of the RSI. From 50 below means you are in the downward trend. From 50 above means you are in the upward trend. When this happened, when this crossover happened, I checked the RSI is 50 below. Then also within the RSI, I didn't show this line during the explanation. During the RSI, this yellow line is the RSI based moving average. Okay, it has its own moving average, and let me see, okay, it's thick enough. Let me change it to a color that is more visible instead of that. Okay, this is more visible than the first one. Then the 50 line, can I make it bolder? The 50 line, let me make it thicker and change the color to black actually. Okay, so what happened is, at this point I have the crossover is below the 50, is below the zero line, the MACD zero line, and it's a crossover down, so it's a strong sell for me. I check the RSI. The RSI is below 50, so then all I do is to go down to the lower time frame, and from that lower time frame I will take my from the lower time frame, I will take my entry positions. Okay, so that's why I need to step down to the lower time frame. If you are a range trader, right, you could also, and you have enough capital, you can take your entry from here right away without necessarily going to the lower time frame. It's just that it will not give you opportunity to do a tighter stop loss, because the stop loss I'll place here will be within this blue region, right, just something above the last week here. So my stop loss will be here, then whatever might take, depending on the ratio I want to take my trade. We will still see a live one that's going short here. As I said, where is the entry point? There is a crossover here. So I immediately after this candle, because it's also an engulfing candle, I'll place my sell here. Now, as I said, you have multiple regions here. You take your stop loss, you take your take profit. Your take profit 1, 2, 3 is clearly indicated on the screen. You see, this is the first place, second place, and third place. So what usually happens is that if your intention is to actually trade one lot size, you can break that lot size into 3. First entry trade will be 0.33. Second entry will be you break it into 0.33. Now, first take profit will be this region. Second take profit will be this region. Third take profit will be this region. So at the end of the day, you have traded the 3, because the first one will close here. Then if it goes in your favor, the second one closes here, the third one closes here. But your stop loss would actually be here. So if we look at this, the first one is 1 to ratio 2.24, which is this. If I extend it here, this is 1 to ratio 3. If I extend it here, this is 1 to ratio 4. Okay, so this is a very good trade here, and we see that this one will hit the take profit here. Now, similarly, this is now a resistance. This is a resistance. Here it becomes a resistant turn support, right? As I said, usually I would take in this. It's a resistant turn support because it break through, it came here. Instead of also sitting back, it also break it through, and this becomes a resistance zone. Again, it's a resistant turn support. It comes out and this continues. So this is basically the strategy to use to combine RSI, MACD, and the prices itself. This is where I want us to do the practicals. Of course, you know that these are indications of news that are coming up. So usually they have impacts on what the prices would do. So here, prior to this news, let's do a deep analysis here. At this swing point, what you could do, the swing point, there is a swing point at a very important zone, and if you check, it's a support turn resistance zone. Okay, when this swing happen, when you have a doji here, then in that doji you see that the candle here on the MACD is already fading out. Okay, it's fading out, but your RSI is above the 50 zone, which means there is an uptrend. The RSI is above 50 zone. You need to be cautious. You don't jump into the market. This MACD indicates that there is also the buying pressure is reducing, which means sellers are about to take over. So what you will do is that in this case, there is also, sorry, I didn't show you this. There is also this analysis where if you detect a convergence or a divergence of price, you have two MACD points and is moving in the opposite direction of the price, then it's also a potential reversal signal. How do I put that? Let me show you through this. Here, we see this is an uptrend, right? This is going up. Let me change the color. This is an uptrend, okay? Then if you check the two highs region of MACD, let's see this. This is the high point. I'm using the histogram now. This is another point here. Again, just like as I showed during the sorry. I'm not able to pick the MACD line. Okay, but you would understand what I'm trying to do here. Let me do this. Okay, good. Now I pick it. So you see, I joined this high and this high. You will see that definitely if I extend this line further, it will be clear to you that this is now on downward slope. This is upward, this is downward. When this happens, you are able to identify this, then know that you have, this is also a divergence. Divergence of the MACD and the price is an indication that there is a potential turn of market. Now, when this happens, what you will do is that you will place, I need another line. Let me take, I'll prefer this, I'll pick this horizontal line. You go to the lowest point between these two MACD points, which is this little red here, then place a line there. This line, let me change it to, let me make it thicker. Let me change the color to red so that we can see it easily. So this line, what you will do is that you will not enter the market. You will wait when the histogram closes below, the first histogram that closes below this line, you will take your market there. What that does is that when you take your market there, if you enter your market there, sorry, as I said, I'm just not, I don't want it to fast forward. That's why I'm not switching yet. This, when you spot this divergence, you need to actually go down to the lower time frame so that you catch this early. Because if I wait to enter here, the crossover happen here, right? And if I'm entering here, I might have lost some good moves because my stop loss will be above this region. So what you do is that you step down to the lower time frame to look for this convergence. Okay, first of all, we have the support and resistance zone identified on the higher time frame. Then this divergence is for the daily time frame. I'm supposed to look for this in the 4-hour time frame. So when I spot it in the 4-hour time frame, then I can now begin to place my order and have a tighter stop loss than this. So as I said, let's move forward. I will take that. Okay, I can even take that here. Let's look at this. Yes, it should. Okay. Yeah. This is the region where we had the price touching the support. I think it's up. Let's look at the date here. Here is October 22 October. Let's come back here. I want to see something. Oh my God. Where are you? Okay, at what point here? August. October. I'm looking for October. Okay, it was this one. I'm looking for this. What date is it? It is 27 August. Let's go to, let me delete this one. As you had this movement, it came down here. Immediately it's touching this support and resistance zone, What you do, immediately it's touching here, you go to the lower time frame. This is 23rd of August. Let's look for 23rd of August in the 4 hours time frame. October, August. 22nd of August. I saw August, sorry. 22nd of August 13. 22nd of August is within this region, so which means it's here. Now this is the point we are. Okay, from here what you need to look out for is to look for two join two zones. If I from here we are having a run of higher high, higher low. I use this, from here up here, is moving this direction. Then on the MACD from here, this is one of the region. Then mark the next high. The next high is here. There is a slight slope in here. Okay, is divergence. We have a divergence here. Now what you now look out for in this scenario is that you look out for one on the RSI. Do I have any overbought situation? No overbought situation, but there is a MACD crossover here. So when I have the MACD crossover here, and I look at the MACD histogram, and it's a thick red, which means there is momentum here, then I place my trade. So what happened here in this case, you place a sell. You place a sell here. Where is the sell icon? This Fibonacci, no, not here. Okay, it's here. Here I'm supposed to go short. Where is the region? Here. After this one. Okay. I still have the line from the other market we traded. Let me. Sorry. I still have this line. Let me delete it. Okay. I delete this as well. So from here, what happened? I'm coming. 1 second. Okay, as I was saying, now we have I have moved this as far back as 2013, 2014. So let's begin to plan our market entry using the tool, the MACD, and also the relative strength index. So first of all, we have to identify on the chart the support and resistance level on the higher time frame. This is the daily time frame, which is okay. We can decide to put a support and resistance level, and then let's see what's I'm moving back a little. Okay, let me start my readings from here. We had in this up run where you have this higher high, higher low, higher high, higher low, still within the same region. You have higher high again, higher low, and so on. So for us to put the structure, this is how you mark it. Watch. When you have this higher high, it became the highest structure here. Then it goes down again, and then to form a higher low, and so on. So what I will do this time, I'm going to use a different approach to plot the support and resistance level. In this higher high, this is the last candle here. This is the last candle before this reversal. So I will use the whole of this candle to actually plot the region here. Okay. So to do that, I come in here to pick my box tool. Then from the wick to the lower wick of that, I marked it. I have done the setting of the box to extend right. I did this for a reason, so that we can use it to mark our important regions. Sorry for that short break. So we go back to what I said here is we look for August 27 in the 4 hours time frame. August 27, this is the 4 hours time frame. I'm in November, October. This is August 19. So this is the region, right? We have this here. I have this here. Then I said, okay, I've deleted the red line now. So what happened is in between these two, you look for the lowest point, which is here. As usual, we will put our straight line there to mark it out, so that when the candle breaks below that, we enter our sell. So now we've gotten our entry signals from the lower time frame, which is 4 hours, and the point that the candle closes below this line next is this candle here. So if you check, which means at this point I will take my sell. So if I place my sell here, this I need to place it. This is how we short position. We said it crosses it here, right? So at this candle, I place a sell. Now my stop loss will be something above this. Then my first take profit, as I said, will be this region. If you like, you can take it to the end of it. Then the second take profit will be the other one, which we also saw here that yes, this trade did not go back to break to hit our stop loss. Rather, it went to take our profit here. If I go back to the daily time frame, in the daily time frame, August, which is in the front, right? November. Our August is here. Okay, sorry. The setting is not showing it above. Let me change the visibility to, let me do all interval, for example. It's on all interval. So in this case now, if I go back to the daily time frame, it should be there. Where are you? August. What's happening? Okay, 22. I mean 23. 2012. No. Oh. Yes, this is the trade here. So this is it here, okay? Then it happened here. Now, what we want to do, as I said before, in the interest of time, is for us to analyze this market here and see what will play out. So the first thing I'll do here is that, okay, this market is gone. Then it came into this region. It went back, it came again. So we had lower low, lower high. This high forms a new region. We need to put mark our zone there. Where is the, sorry, not you, where is my drawing tool? Yeah. So here you have a new region forming. Now let me change it to a lighter one, because it's just a new resistance zone that just formed. Okay, so the expectation is that we have a new resistance zone. It came into the initial zone, then it break through it. I might have missed this opportunity, but our entry condition is that since this is a new one, we will wait for it to retest that region before we place our entry. Okay, you should not force the market from here, you jump into it. Okay, of course, this event here would have been as a result of a news. Let me lock it. This event might have been as a result of a news, but if we check, do we have any indication here that could have prompted us to enter the market? we had, okay, we took this market, okay. Yes, it was, since we took this market, this is just market consolidation and stuff like that. So we don't blame ourselves for not taking anything there, okay, which is good. So now my conditions here will be to wait for a retest of this region. Now when it breaks down up to this point, what we look out for is there any potential? We had MACD crossover here, which is, it will already be late for us. We didn't take the advantage here, so we let that go. We had MACD crossover. By the time the MACD line is crossing 0 point, you're already here, so it's touching this now. Now what we begin to look for from this region, we are supposed to also look for another entry down. But before this, let's mark the zone. The new zone before this turned up was this one, okay, which is also here. The zone is already, the zone already formed here. This was the last zone that, let's see, yes, it's another support turn resistance somewhere here. You have this zone. When this market came up, it came down here, then up again. So I will use this as my structure. This one, I'll mark this out. This is another zone, but eventually it turned out to be a support and resistance zone. It's too thick, yeah, so that we can still see the candles through it, okay. So lock this as well. Now it breaks through, it came down here. Now I want to analyze this market now to see if we have any entry. Yes, we have the second one here. Instead of stopping here, it didn't stop, it breaks it through. So again, another formation happened here. I'll put another one there, going back. But what I am seeing is that even though it went back, it has not touched this region. Okay, the region is here actually. This is the last candle before the engulfing here. For this one, we would, for this region, okay, for this region, let me see, I lock this, right? I want to unlock it. Let me use it for this one. I have it here, I have it here, okay. So it went through, it came back, it retested this, then this is more like a continuation. First of all, in this region, it went out, it breaks it now. Our expectation is that this should come back to retest this region if it's going to continue the downward movement, okay. So what we look out for is that, let's check our RSI, our MACD. Is there any information we could see there? Here we had the MACD is below the 0 line. We had a MACD crossover at this point, okay. The RSI is also below the 0 line. It's not yet in oversold region. So what I will do here is that at this crossover here, I will scroll down to see, and I'm already missing something. There is a crossover here and there is an entry here. There is yes, there is a crossover here. This is below this. It shows me that there is still strong indication for sell, even though I'm waiting for a retest of this. So for this reason, I'm not confident yet that I can ride on this sell, okay. Even though, let me zoom out bigger, okay. Yes, but there is an indication, because, sorry, I'm taking this red line out, is confusing us. So this we already, from here, you had a crossover here, you had a thick histogram here, which shows that this is below, this is below, this, all the conditions here is pointing towards a sell. But because my rule here is that there will be a retest of this region before it goes, I would wait. I have two options. If I place a sell here, I didn't have a zone marked down here that would I didn't have a marked region here. I can go back, but I might go very far before I can see the next zone. But let me wait first to see what this market will play out. I'm waiting for its retest. So now, while waiting for its retest, it could retest and go down, and it could retest and break it. So if it's breaking it, I'll take a buy. If it's retesting and going down, then I will be very cautious because I need to watch this to get to the oversold region. Let's do the playback. I'll move it to 3 so that it's a bit faster. Good. Pause. Oh. So now it touched it here. Then see exactly what happened. Before I could pause it, it's actually breaking up. So this breakup, if it's not a fake breakup, is coming up here. Let me reduce this to 1 so that I can speak along as it's going. Okay, so let's see. Consolidating. Now it touches it here. So let me see. When it touched it here first, which means I had the first one here, it came back, it touches it here. Ideally now, I'll be at this point. At this point, you have this doji, inverted hammer here. I will go and look for my market entry conditions in the lower time frame. If there is anything that I could, which date is this? 20th of January. So I step down to 4 hours. Then I will look for 20th of January, 23rd, 21st, 20th. This is the point it touched it. So at this point here, I'll look for entry position. Do I have an entry position here? Yes, this is an entry position. But before I take that, in the 4-hour region here, I have an entry position. I have a sell entry here because this is the engulfing candle. So I'm supposed to place a sell here. Let's do this. Where is the short? So my sell, see this close, it will be the opening. This is the opening here. So this is my sell, and my take profit target, first take profit target will be here. My stop loss will be here. Okay, will be something above this region here. Now this trade, if you look at it closely, it went against us. It didn't reach my take profit target. Rather, it went back and then hit my stop loss. So what happened? What would have possibly gone wrong here that this did not hit our take profit and it went back? Look at my entry position. I said immediately I had the engulfing candle here. I entered the market here. Okay, engulfing candle, then I entered with the opening. So when I enter with the opening, then I place my stop loss. My stop loss is even tighter. Okay, yes, I place my stop loss on the 4 hours region. My reward to my risk to reward ratio is 1:2. Okay, so what happened here is that at this entry point here, if I look, I had the crossover, yes, but note that it's not below the 0 line, and at the same time it is also above the 50 moving it's above the 50 RSI, which means I risked it because it's still in an uptrend. So that is one of the lessons here. Let's proceed further. I will switch back to my daily time frame. We lost this market, okay? Then I switch back. Let's see what happened. Let me make it 3. Yes. Okay, pause. Oh my God, it went again. Now, we lost this. We had higher high, higher low, higher high, higher low, higher high. A new higher high has formed, which went to the former region we had before. We will be expecting this. Two things can happen. Either it breaks it further to continue to the next zone, or it comes back to retest this region it just broke now. So if it comes to retest this region, I'll be taking, we'll look for the conditions, the market condition. Mind you, there are news events across here. So we'll be looking for market condition that would take us, let's reduce it, that would take us back into this, or this. Okay, so let's play further. First, here, okay, I didn't take this opportunity, I will let it go, but there is a perfect opportunity here to enter. There are indications here that it's going to go up. Maybe we missed it. Let me continue. I'm waiting for the retest of this region. The retest of this region to, okay, as I said here, it went up. Okay. Yes, coming down here. Coming down here. Touch. Okay, good. Stop. Now it has touched this region. When it's here, what you need to do, you go to the 4-hour zone to begin to look for either a buy position. If it didn't break, if you break it down, no, okay, we should see the indication here first before we go back. This is still a sell, engulfing sell, stop. Now go to the 4 hours now. In the 4 hours zone, it's more like consolidating within this box, so it's not a perfect entry here yet. Continue. Good. Stop. Yeah. So here now I see a perfect entry here. It left this region, it came back to retest. Immediately I have engulfing here, which is here. Then I'll bring in my tool. I want to go long here at this point, this new opening here. I go long. So my stop loss now will be below this region, which is here. Okay, below the lowest low here. My first take profit target will be this region. In fact, yes, will be this region. I will be coming in here. Then that's the midpoint of this. Okay, the midpoint. Then if I open more than one trade, the second one will be midpoint of this, the third one will be midpoint of this. Okay, and what will happen is that as soon as this is reaching here, I either tighten you have an option, leave one trade on. As soon as it set your take profit here, as soon as it reach your first take profit target here, you tighten your stop loss, you move your stop loss up here. Let's continue this. Let's see how it plays with our stop loss set for this one. News action. Go on. Good. Go on. Let me fasten it. Whoa, it almost took us out here because the take profit I put is midpoint here. Okay, let me just extend it first. Again, it almost took us out the second time, although if I have played safe to put it at the entry here. So did this market took me out here? No, it didn't take us out. If I had put it here, would have taken our take. Now it took me out. So this is over ambitious here. It was over ambitious at this point. I should have put it here at the beginning of that entry point. Okay, if we put it at the beginning of the entry point, it would have hit our take profit. So this market is gone here. At this point, this market is gone. So also take note of this. When you mark your regions, when you mark your region for for take profit and stop loss, make sure, sorry, not when you mark your key regions, right? Make sure that your take profit and stop loss is set at the entry to those points. That will put you on the safe side. Now let's fast forward this now to see okay, now it breaks this region up, it came back again, retested it here, it came down here. Now the potentially, if we look at this, if this is a change of structure again, our expectation is that this is going to break this down towards this region. Okay, I'll change this to 3. I'll walk around it. Towards the end, we would stop to take 2 more trades just to see the consolidation, what's happening here. Yes, it breaks it down. It retested. Is it retested? No, it's not retesting. So you could see it's playing within this, but as it's playing along, stop. Yep. Here we had a crossover here, right? Then we have it below here. Unfortunately, we had the crossover here. RSI is still above. RSI fall below here. The MACD line crosses the 0 line as well. Unfortunately, the histogram of the MACD line begin to fade. So it's an indication that even the sell signal here is not strong enough. Then let's see what will happen. Let me reduce this to 1. If I have this MACD line cross 0 and it also crosses the signal line, and I have the RSI, which is the blue line, also crossing its own moving average, if they are all above here, I'm looking for a buy entry. Let's go gradually. MACD crosses, stop. A MACD crosses over here, close to the 0 line. I have tick histograms. My RSI is already up here. So what will happen is that this consolidating point, but the MACD line and the signal line is very close. It's not opening up. However, I'll begin to watch because it's like consolidating. Then after that, you see, if I had stopped again, if I had jumped into the market here because of these green indicators, I would have lost it because it was not strong enough. It's still consolidating around the 50. This is also consolidating around the 0 line, and then you have this. So let's move forward faster a little. I need to change region to a volatile region. Mark you now, because we are using the RSI, let's look for an overbought or oversold situation with the RSI. I will ignore what is happening up there. I'm looking for overbought or oversold situation. More like it. I'm looking for one. This was a close one. I need it to come out or go above. That's a very strong entry when you have it. Mind you, we are doing this testing on the higher time frame. If you do it on the lower time frame, it's also the same. So for intraday traders, you can use that. Then for the others that do ranging, that's if you are not trading on intraday, that is not trading the daily 4 hour, 1 hour trade, then it will also work for you. It respects whatever time frame you are in. Okay, I'm looking. Do I fast? Okay, good. I have one here. Very good one. I paused it here. I have an oversold situation here. Okay. Now, this is in downward trend. We have a downward trend here. I have oversold situation here. The MACD line crosses over here and is also down here. They are below the 0. The histogram is beginning to fade. Okay, and this line had crossed back. You have a crossover of the RSI and the moving average line. You are also having a potential crossover here. Let me reduce this to 1 now. So what will happen here is that when this begin to fade, this is a consolidation and it's a strong indication that perhaps my downtrend that has been coming from here is closing to an end. What other thing can keep me informed about this? I will look from here. Okay, from here I have the RSI indication here, but I don't have a clear entry yet. I might decide to, since I have RSI, I might decide to go to 4 hours zone and look for convergence and divergence if it's available. Mind you, also at this point you begin to look for other candlestick patterns, whatever information that you can get that would help you to that will clearly let you know that something is about to happen. Now the only thing I see here is that if I join this and this, I might be seeing joining this and this, which is, sorry, I need to join this zone and this zone, right? Then I will also join this and this. What is it we are seeing? We are seeing a convergence. Okay, in the 4 hours zone I'm seeing a convergence. So what I'll now look for, I'll begin to look for entry. Here there is an engulfing candle here at this point. So okay, you also have the MACD crosses over the signal line. You are beginning to have above the zero line thick formation of candles. Okay, this is a potential buy, and when this buy happens, but one thing is that I don't know whether I have missed the key area here marking, but this is one of the lowest lows now. So what I will begin to look out for, if you remember our last rule, is that in between these two, which one is the highest? This one is the highest, right? So I'll put a straight line there. I'll put a horizontal line here. This is the highest here. I think it's red. Yes. So as soon as I have a candle, as soon as I have one of the green histogram form above this, then I would enter the market. Let's see. Sorry. Okay, we can. So this is the region I can enter for a buy. We can fast forward it a little because I had oversold situation. Stop. Yeah. This is the 4 hour zone. So I said as soon as we have this above it, right? So I stopped it so I can move to 1. Yeah, I'm waiting for this to form above this. There is a news action about to happen somewhere here. You see it's fading out again. It's not too strong. It's fading. You see, look at it. The momentum was not that much. There is no momentum because it did not crosses this, even though I have a divergence. However, it's still it's okay. And again, I have a crossover here coming down. So at this crossover point, let me pause it. I had a crossover here. It's not below the where is my zero line? It's not below the zero line. There is no overbought or oversold condition. Let's continue. Now another crossover happened here. Another crossover happened here above the zero line. Okay, so this is an entry for me because it happened here. I have a green line here, but not thick enough. It's still not above this. The momentum will not be strong. Let me continue. Fading again. Yes. Stop. Yes. So here I have it above it now. So what will happen is I'll begin to, it is above it, though this is showing overbought, but it's above it here. And this, if this is saying overbought, is a warning signal for me that even though this is above this line, it is not too okay for me to jump into the market, because the market might be reversing. Now another one. Here I have it. You see, look at what we said here. Even it went above here, we're not able to take the trade because, as I said, it's a potential reversal. There is a zone here we did not mark out, okay, because we were there are zones here. If you check, you have lower low, lower high, lower low, lower high, and so on. So there are zones in between here that we did not mark. Yep. Yes. So there are some zones we didn't mark out, which might be zones that are playing. I'm going back to see where I can begin marking. So here there is one here. You know, when we're doing the replay, we left out some of the zones that we're supposed to have marked. That would have prompted us to stop and maybe take some trade. Mark these zones where you have momentum. This, we have another momentum candles here. So you come here on how I mark this zone. If you check the previous video, you will see them. As I said again, you lock it. Okay. I've seen why we missed out some of because we would have taken some some possible trades along the line. It came down here, then you had the momentum here. So let's take this one as well. Lock. So you keep doing this as you are progressing, because they would actually, okay, here you had, this is little, but you have momentum candle here and it started from this one. So here I'll also put another one here. So this is how you're familiar with my style of marking regions. So this is a support and resistance zone, because it touches it here, went back as a resistance here, it breaks through here, it came back a little here to touch it, and so on. So this, you have the same thing here. If I drag this back a little, you also see that it came into here, come back, then it breaks through it. Breaking through this, now you have two options. It's either coming to retest this, break it down, and go up. So at this, okay, I'm in the 4 hour zone. Let me go up. Yes, because you usually mark this in the higher time frame, and then you go to the lower time frame to check how it played out, your entry position and stuff like that. Okay, good. A retest here then is going down here. Let's put it on the fast track lane. It's going down. Then again, you have a retest of this region. It came here, so now it broke it up, test this region, coming back in here. You wait for a retest here or a break. If it retests here, then we'll look for other market conditions. Okay, no, yes. So okay, it's going down. It retested this region again, retest. What is it going to do? So is consolidating. Now let's pause a little to explain something here as well. When it breaks this down, okay, then it came back, retested, breakdown, retested, breakdown, and then the buyers pushed it up again above this, and it retested this region. So retesting this region now, which form makes this support and resistance zone, we are looking at here, it breaks this. So what will happen next after this? Is it potentially breaking this up or down? What is our, sorry, I have to take this red one out now. What is our MACD saying? MACD has shown a strong indication from here, but this was fluctuating. This was below. We had an oversold position here, so we're watching. Now we had two. If we join these two, it's let's see. If you join the edge of this and the edge of this is sloping up, what do we have here? If I join this, let me use this one that is already here. If I join this and also join this, so there is convergence here. It's a reversal indicate. There is an indication for reversal, which I would actually look for within this second, within here. Begin to look for it here. But because it has not gone above this, I would stay action, waiting until it crosses this. You could also use the until it crosses this region. It did cross it. Then it came back to retest it. So this is the region I need to go down to the lower time frame to look for my entry position, which is this region, right? So from this region, if I go to the 4 hours time frame, here I'm looking for an entry position. An entry position could come in different form. I see one here. There is an engulfing, which is, there is a run here. It came, retested it. So after this retest here, now I'll place my buy here. So I'll place my buy. It's already in the region we're looking at, but I want to use this to also check some other information. Long position, as I said, it's came out here, retested. So my buy entry would be with this candle. Then my stop loss would be somewhere below this. No, it will be below this retest, the point it retested it. Now my first take profit will be here, but I want to show you something. So I have to go up. I'll come back to set the take profit here. When this happens, when it breaks this region and retested here, it means that I can calculate. That's if you know our ELLIOTT wave theory, because this is a change of trend. An indication is a change of trend. I have this crossing up. So I would want to apply the ELLIOTT wave theory here, where I need to measure this distance to this distance and multiply it by 1.618 to see which of the marked regions that it's going to fall into. So here I come here, I take this to this region. This is 54. 54, 1 second, let me calculate it. I need to multiply 54 by 1.618. Multiplied by 1.618. This gives me 87. So 87.3. What I will do, 87.37. I will take the ruler again. Then this is 1. So from this point, I'll measure 87.37. 87.37 will be within this region. Okay, the region now where this is falling to, the region this is falling to is this region. And mind you, I have this one here, though I didn't mark it before. You have a strong momentum here. Let me mark that. 87.37 is falling into this region. Yes. Okay. If I take that again, I was measuring from here. 87.37. Measuring from here, I had 87.37 falls in this region. So what I said the other time is that we will mark what we will mark here. This one also unlock this. I'm correcting this one. This was this, right? Which would have been, is it marked correctly? Yes, this is marked correctly. So it's also almost the same thing with this, but the 87.7 region is falling into this one. Let me take this one out. Yeah, so it's falling below here within this region. So I will extend this to that region. This is my take profit. Okay, let's play. You see, it hit my take profit and then went beyond. So you see what played out here. I use this the oversold. I capitalize on the oversold. I see the MACD crossover. I see the divergence, the convergence of this movement, and then I used another tool to actually calculate my take profit to hit this. So I would increase this now, let it just take us back. While we see, what I need you to observe as it's playing is that you see how it is playing within the regions we marked out. Look at how far it was in the behind that we have marked these regions, but each time prices get to this region, they respect that region. You have the players come in and then take their trades, and it's respecting this. So first assignment before our next class is that everybody should go back to your demo accounts, mark out these zones. Not only your demo account, for those of you already trading live, go to your live accounts, mark out go as far as possible. You can go, like, let's say you can go as far back as 5 years. Mark this on using your daily time frame. Mark out your key zones. We call them the area of confluence, right? Where players come to play, where the traders usually come to have events in between them. And then your entries should be, when you now apply your different rules, you look at your oversold. In this case, we have another oversold condition here, which is two oversold conditions close to each other is an indication of a change of trend. It happened here again. So you have an overbought here, one. Look for if a second confirmation happen, then it's consolidating, right? This is another indication. This is the second one. Let's pause this and try something out. So let's look at what happened here. You have an overbought situation here. Okay, it's a parallel line here. Yeah, overbought. Then this one. Let's see. Let me see my line. You have an overbought situation here. You have another overbought situation. Okay, quite some distance. But if I mark this and I mark this, there is a divergence, it's possible reversal. Then you wait for it to happen. This here we're expecting, because it breaks through this structure and got here, we're expecting a retest here, but it again breaks it. So is this breakout here a fake one, or it is actually a continuation? If it comes back in here and breaks this, it is a fake one, then we'll be expecting it to begin a new downward journey. Otherwise, it's a continuation of the upward. What happened? Yes. Pause. So it came down here, it retested this, it came down here and it repeated what happened here again. But this time you have a higher high. So this is a change of structure. Now we've had enough tools from our various tools that we have introduced. We have different tools. While this was playing, I also saw something here that has to do with one of our tools in the past, where we talked about the Fibonacci retracement. Okay, in that rule is that when a structure is broken, I mentioned it during the Fibonacci retracement video. Look out for that and watch that when one of the key region is broken this way and it comes back to retest the previous region, if it's coming back, it's going to go above this. You know, it breaks this, it comes down. Then if it's breaking it again, it's going to go to the next region up. This again, we will find time to see how we can combine that with another indicator. It's just a choice. If you go to the comment section and you drop what tool you want me to combine, and then we do a live a demo test like this together to see the winning rate, back testing to see the winning rate of that tool combination, then you take it to the market again. The most important thing is that the practicals we're doing, they are respecting our, not only our key areas that we mark on the chart, even the tools that we introduce, that this is how to use this tool, is also respecting it. So this is where I will stop for today. And if you have questions, please don't hesitate to drop it on the comment section. Next week, again, God's willing, we would look out to most pressing requests, what we need to do together. Just a quick recap before I stop the video finally. We talked about the RSI. We explained what RSI is, Relative Strength Index. We talked about the MACD. MACD is just a recap of it to explain to us what the histogram denotes, the colors. If the color is thicker, if it's lighter, what you need to look at. We talk about its convergence, divergence, then our entry structure. How do we entry strategy? How do we enter market? First of all, we mark together the support and resistance zone on the chart in higher time frame. We went down to the lower time frame to identify if we can see a divergence or convergence. And then the strategy there is that when you see that convergence or divergence, look for the low point or the high point between the two zone. Okay, high point or low point between the two zone, where the one I was denoting with the red line. And after that, mark that and wait for its break. When it breaks it, the first candle that breaks that zone on the MACD is your entry position, and your take profit target will usually be the areas we have marked as our marked as structure on our charts. Okay, so please, if you're watching for the first time, do subscribe to this channel so that you can get notified. Subscribe to the channel, set up your alert, enable your alert so that when we post new videos, you can get alert and also go to watch them. Like the videos, share it with your friends, bring them here. We have a training academy where we do one-to-one. If you want to reach us through the comment section, drop your notes and then we'll revert back to you. Thank you and have a nice day. See you next week. Bye-bye.